much more reliable information is available and more easily available. You have to establish the credit worthiness. It is all about pricing of the risk. If the risk higher, price would be higher. If the risk is lower, price would be. The risk of multiple borrowings without even lender knowing that a person has borrowed from different banks or sources. So that possibility has now been eliminated. When you're looking for a borrowing, so it is important that to the lender you come clean. So information which you give to the bank, it has to be reliable.
Hello and welcome to MSME Exchange, Mr. Rajneesh Kumar. Great delight to have you join us today for our flagship event. Today we are basically, as discussed, we are basically looking at picking on your brains and experience to understand how credit penetration for MSMEs has really improved with the rise of fintech on one side and existing lenders really like SBI and other large banks upping their game to improve flow of credit to this sector, which largely has sort of, for a variety of reasons remained outside the ambit of formal credit. My first question, Mr. Kumar, to you is because you bring 4 decades of serious banking experience and now you're chairman of Bharat Pay as well. What has changed in the last few years which has resulted in improved credit flow to the MSME sector, which, as we know, is the lifeblood of any economy?
Yeah. No, a lot has changed because we are living in a world which is a connected world and the availability of information. So the major trends, if I were to capture as far as MSME lending is concerned, one is the aggregation of the economy, say likes of Amazon, Flipkart, and there are suppliers to these platforms. So availability of credit to them. Similarly, more information is now available through interconnectedness, whether it is income tax return or the information regarding the GST turnover and the credibility around these numbers, because the income tax returns, I used to jokingly say that in our era, when we were doing manual, so there were 3 types of return a businessman would keep: one for himself, one for bank, and one for income tax. So the reliability of data itself was questionable, but not anymore, because income tax people, they have all information and they're able to connect it to your GST turnover. So that way, much more reliable information is available and more easily available. Rather than going through a manual process of submitting the information now can be available through online and through clicks. Then we have the rating agencies which provide rating information. Then we have credit bureaus where the record of default is easily available. If the upper side of MSMEs are there, then Reserve Bank of India maintain a registry which is called CRILE. This is for 5 crore and above accounts. So that way now availability of information and data and the ability of the lenders to comprehensively analyze using their underwriting models which are based on data analytics. So this is leading to a shift from what was earlier a security-based or asset-based approach to lending to the cash-based, cash flow-based, or an information-based or data analytics-based lending models. So the availability of credit from the formal lending system to the MSMEs, this is increasing. And this is a very good, I would say, sign of the benefit of technology and availability of information, which is in a manner democratizing the availability of credit, or what you can even call commoditizing the loan products as far as the lenders are concerned.
Right. You talked about data. Data, of course, is very critical. Today, data is being used to take better informed decisions by lenders, whether it is payments data or, as you mentioned, is GST and filing, GST data, cash flow data. Could you kind of explain how, typically lenders, new age lenders, are using these, and how technology is being used to basically plug into the system so that they have real time information about the MSMEs they are lending to, which earlier was not the case?
So basically, when the landing is done, there are two, three things. First is you have to establish the credit worthiness of a borrower. So as I mentioned, that there are credit bureaus, there is CRILIC. These are the agencies through which, and many other data points are being used now by the lenders in their underwriting model to determine the credibility or the credit worthiness of the borrower. So that is one. Second is about the ability to generate the cash flow. So an idea about that, what is the turnover, how profitable the business is, what is the cash flow cycle, what is the working capital cycle. So for this now, more reliable and accurate information is available because there's a cross check. I just gave you an example that today, if you file your income tax return and if you have a GST number and all the data is captured in your information available with the income tax department, which is AIS. So that way those linkages are there. Third thing is capability of the lender to capture the cash flow, which is essentially what you call the vendor financing or supply chain financing, where a vendor supplies to a industry major or a aggregator like I mentioned, Amazon, Flipkart, and when the payment is made, it comes to the lender. And that makes lending much more easier and safe. So in this type of lending, particularly around supply chain financing, and most of the fintechs, what they're doing, that they're not doing asset-based lending. They are more into cash flow-based lending, where their ability to capture the cash flow because of the technology enablement, it is there. And what it does is that it gives a much more comfort to any lender, and it's a much more, it is a better system than giving loans against asset. You may lend against asset, but realization and how do you realize your money and keep an account a performing loan, that poses quite a challenge.
Right. Talk about banks. You've been on both sides. You understand both sides very well. One is the co-lending model, which many banks are pursuing. That's what the regulators also is kind of suggesting. What are the strengths that fintechs bring, and what are the strengths that a bank typically brings? And if I'm an MSME, what are the opportunities for me today, which didn't earlier exist, to borrow from various lenders? What is a good model, and what are the strengths? What are the kind of inputs that banks bring for me as an MSME, and what are the kind of inputs and support that a fintech brings to me?
As far as the legacy lenders are concerned, or particularly the scheduled commercial banks are concerned, they have targets under the priority sector lending to lend to the MSMEs. So they, of course, do it directly. And the advantage with, of course, the banks are that they get liabilities easily. So the funding source or the availability of funds, that is with the banking system or the banks, and that is their main advantage. When it comes to fintechs or even to NBFCs, their last mile connect with the customer is very good. The capability to originate and collect is better than the banks, and that is where complementarity lies. So when we go for a co-lending model, obviously the bank is one is, of course, the underwriting model has to be vetted by the bank because a larger part of the share is being taken by the lenders. It all depends upon what kind of arrangement under co-lending is there between the fintech or NBFC and the banks. It's all about risk reward sharing metrics which they agree upon. But the funding support that comes from the bank and the writing on the technology platform, the origination and as well as collection, uh, that is done by the fintech, or if it is a partnership between NBFC and the bank, or a partnership between NBFC and a fintech, then again NBFC, they do the job of gathering the liabilities and providing the funding. And I think it works well. And for example, you talked about like I being with the State Bank and now being Bharat Pay. So Bharat Pay's model is that we are a sort of a technology service provider. We don't have a balance sheet of our own, and but there are, say for example, 3 million active merchants, and if they want a loan, they can approach, and there is a front-end application which has been developed by BharatPay. And the ability, because the money is flowing on account of QR code at the merchant's place. So daily collections are coming, and BharatPay today has capability of daily collection. You would have heard of EMI, but we have EDI, equated daily installments of a loan. So that is the advantage which a technology platform brings in. But as I said, that we don't have a license to lend, or we don't own it. We don't build a balance sheet on our. It is a partnership with the banks or NBFCs, and the loan gets passed on to them. So it works well for both. All the work, major operational work, is done by the fintech, and as I said, that funding support is provided by the bank or in an NPFC.
What about the account aggregator framework? How is that sort of likely to have a bearing on this segment and their borrowing needs?
Account aggregator, it has the potential to, completely change the way the credit is handled, and it has the same impact, or the potential of having the same impact which UPI has in the payment system. This is the next big initiative which is coming. The number of players, both, there are two elements there: financial information provider and financial information users. And as the number grows, the utility of the platform would also increase. And it makes the task of gathering information, all types of financial information, banking, insurance, mutual fund, whatever the financial assets of an individual or of a person or of an enterprise. So that is available and will be available. And consent management is the key. That information will be available to a user. User in this case is a lender or from any entity or from whom you want to borrow. So they will be able to fetch the information again digitally with the consent of the person. And consent management is the key to this. And it will help in reducing the operational cost and as well as the credit cost, because more information is available at one place, which is at the account aggregator's place. So this will have definitely a positive impact on the borrowing costs, or what you call the intermediation costs. Because whatever you save, and because it's a very competitive market, particularly for the good quality borrowers, they would be able to reduce their cost as well as the timely availability of credit.
Right. What about delinquencies? This is a segment where the assumption is that delinquencies are high because they are smaller and their ability to withstand economic cycles is a little less than that of big players. Is that a reason why flow of credit is impacted? And how does technology change this negative downside as well for this sector?
Yeah, again, we are coming to the same point that if delinquencies are higher in any segment, then the cost of borrowing for this segment will remain. because unless there is any subsidy or some sort of a unless there is any subsidy or any support from the government, then anyone who is lending, they have to recover their costs, including the cost of default. So overall, the delinquencies are higher in this segment for obvious reasons, because the section is very vulnerable, and any disruption to the earnings or cash flow, or for that matter, even any requirement for consumption expenses. Suddenly there's a medical emergency, or there is an emergency or requirement for funds. So what happens that the underlying presumption is that when the money is lent, it is for enhancing the income. But the fact is that for smaller loans, the dividing line is very thin between the consumption and the money borrowed for the business. And that is where, because either loss of earnings or any emergency expenses, that can lead to default. So, I mean, that's a given. And as I said, that to make it rewarding, or at least the targeted return on the network for the lender, they have to account for higher delinquencies and price alone. It is all about pricing of the risk. If the risk higher, price would be higher. If the risk is lower, price would be. When there is a mismatch where the pricing is not matched to the risk, then there is a problem for the lender, and then they incur losses. And that's what we saw when we had this huge NPA cycle. The problem was not only with certain reasons for which there were so many defaults. I'm referring more to the corporate segment, but there was a huge mispricing of risk. That was another reason which led to the huge losses for the lenders.
Right, right. Talking about time taken to disburse credit, that's sharply sort of come down. And is it likely to come down any further? Is what I would like to know. For instance, up to 1 crore, what is the typical time taken, and sort of how fast can that deployment happen from start to finish? And what are the key sort of pieces which sort of slowed down the process, have been sort of fast tracked, and which is why deployment has become so swift?
Yeah, for smaller loans, unsecured loans, you can get a loan now in a couple of minutes, I would say. So, as I said, because by nature the documentation is simple, there is no security charge to be created. So, loans up to say 2 lakhs, 3 lakhs today for micro and small enterprises, these loans gets disbursed very quickly using the tech platforms. But as the loan amount increases, and if it is secured, then obviously it takes more time. And that could differ from the efficiency of the process at the lender's end. So if what happens that in lending, sometimes the information from the borrower also does not come in one go. And there's a problem with the lender side also, that they don't seek or ask for the required information in one go. And this is a typical problem with the lenders also. And that causes a lot of irritation also in borrower and lender relationship. But otherwise, if the all the documents or whatever information is required, if it is submitted in an organized manner, then it all depends upon the efficiency of the lender. But as I said, that because there's a huge competition in the market, and all the banks, they have their priority sector lending target. So everyone is trying to improve their efficiency, and technology is a big enablement because the capability to process is all based now on underwriting models and machine learning models, particularly for these small ticket loans. When it comes to bigger loans, then manual interventions, manual judgment, they become more prominent factors. So larger the size of the loan, there will be more manual intervention and assessment of the loan. But as I said, small value loans, it's now a most of a commoditized loan products which are available in the market.
Right. What about customization of product? That's what you talked about, commoditization. But there is a need to customize loans for this segment as well. What about that? Who's customizing and what are the kind of needs that they have that needs to be sort of tailor-made products for this segment?
Yeah. So like, I mean, as I said that as far as the supply chain financing is concerned, small value loans are concerned. So most of the applications now through the digital channels, and a lot of information even gets pre-populated because data is available. So that way, it is a customization. Customization is when customization is different than commoditization. Customization means that each individual borrower, you are able to make a product to his or her requirement, right? When you buy a suit from a Raymond, so it is a commoditized product, it is standard size 36, 38, 40. But when you go to a tailor, then it is customization. So technology does both. It enables commoditization as well as it can lead to customization, that each individual borrower, different requirement and ability to give the loan to different people based on their requirement. So any loan, for example, in the same business, somebody may need the loan for say 1 year and somebody may need the loan for 3 years. So that kind of variation, it is on account of the technology which enables both.
Right. This is my last question on credit discipline. With so many fintechs chasing a certain pie, I think there is one perception in the market also, and there's a concern that it might lead to over borrowing and also have an impact on credit discipline. We've seen this in the MFI segment where you had a lot of players chasing borrowers, etc., and that led to one crisis many years ago. So, do you see that credit discipline getting impacted with so many lenders chasing this segment? Do you see that as a problem?
No, because as I said that because we were talking about account aggregators or credit bureaus or registry maintained by RBI. So in terms of like the risk of multiple borrowings without even lender knowing that a person has borrowed from different banks or sources. So that possibility has now been eliminated. The competition amongst the lender can lead to mispricing of risk. But the multiple borrowing or lack of information about what is the leveraging or how much loan a person has taken or an enterprise has taken, the chances are much less today because of availability of the informations, and all information can be gathered through a click. They all are connected with the credit bureaus and this thing. So data is available. But when there's a competition or if there is excess liquidity in the system, and then there is a need to grow your balance sheet. So if those kind of pressures are there, then it can lead to mispricing of risk. And which happens more when there is an excess liquidity in the system.
Right. Got that. Talking about regulatory changes, what about the regulatory changes? Government has very ambitious export targets from the MSME segment as a rule, and that will be fueled by credit and lenders, that ambition of MSME's growth. What has been done so far? And let's do some crystal ball gazing and see that how do you see this segment evolve and how lending sort of will play a very crucial role, and what are the things that MSMEs must keep in mind when they are kind of listening to experts like you about their own borrowing plans and their own financing needs?
Yeah, no, as far as regulation is concerned, two, three major trends are. One is that for every lender, there's a tightening around how do you recognize the asset, timely recognition of asset as NPA. So a lot of regulations are there around and automation of that process at the banks. Second is the regulatory arbitrage between NBFC and banks. So that is disappearing. And Reserve Bank has become and has tighter policies around the NBFCs. And as far as fintechs are concerned, uh, RBI does not directly regulate them, but the digital lending guidelines, which came out about 2 months back, sometimes in November. So there that regulatory arbitrage which fintechs were doing, so that has also disappeared. So that way, as far as the regulation is concerned, its primary objective of ensuring the stability of the financial system and the consumer or a borrower or a customer protection through disclosures and the rules around that. How do you collect if there is a default? So to that extent, the rules are becoming stringent and identical for all the players. So so there is a little bit of a disadvantage in the sense that your regulatory and compliance cost goes up. So that again increases the price of credit. But as I said, that it's very important for Reserve Bank of India to protect the stability of the financial system as well as protect the consumer or the borrower. Uh, so both the owners. And third thing is, of course, they have to ensure that the flow of credit does not get hampered. So it's a huge balancing task from the regulatory perspective. For exports, there has always been an encouragement and incentive to lend to the export. And of course, all the lenders, they do it. And there's an inbuilt incentive. And there are sub targets under the priority sector lending targets. So there are many, many ways through which the flow of credit at a cheaper cost that is ensured.
Right, right. Is there any last message that you might want to give to MSME borrowers as an expert or as somebody who understands this business of lending? If I were an MSME, what would you tell me to sort of, what are the key factors to keep in mind while I'm looking at borrowing?
No, definitely like when you're looking for a borrowing, so it is important that to the lender you come clean. So information which you give to the bank, it has to be reliable information. And it's a matter of trust between the two parties. If they trust each other, then it works very well. And sometimes first time borrowers, life is more difficult. But if a history is established and the payments are in time, it's very important in today's time that the cash flow management has to be such that even today, a single day or 2 days default in meeting the obligations towards interest or loan installment payment, they can have a negative impact on the credit history and then consequently availability of credit. But believe me that for borrowers who have a good track record, there is ample credit available. And banks or lenders, they are in the business of lending. They have to lend. So it's not that they don't want to lend, but the track record matters a lot. And that should be kept unblemished. Sometimes there are factors which are beyond the control of an entrepreneur. That also is recognized, but unfortunately, a default becomes a default. Then nobody goes into what are the reason, whatever, because somebody wanted to default deliberately, or it was the factors which were not under control. But there is no special dispensation, if I can put it this way, if there is a default. So keeping credit history clean, that's very important, and that can be through better management of the cash cycle. And third would be don't over leverage.
Super.
Leverage every bit you can service easily. So we discuss a lot about the credit, but the real problem with the MSMEs is also availability of adequate equity. And what is needed in the country is more and more equity support to the MSMEs, or particularly small enterprises. And the equity support is equally important. It's not only about availability of credit, because if you want to expand business, then you need both equity and credit, both.
Right. Super. Thank you for this masterclass on MSME financing and what are the do's and don'ts. I'm sure that's going to be of great help to our viewers. Thank you so much for joining us today on MSME Exchange, Mr. Kumar. As always, a pleasure having you.
Thank you. Thank you so much.